Okay, folks. Welcome to Thursday Night Stock Charts Live. This is Bob Desmond, or the Contrarian Trader, and welcome. That must be RL out there that just gave me a like even before I went live. Thank you very much for that. And if in good spirit, you could give me a like, I'd appreciate it. It helps me out with the YouTube It helps me out with the YouTube algos. And if you could subscribe to the channel, that'd be great. And we have a lot to go over here. I mean, the news is just ripping today, and it's continuing after hours here. And I've been watching the currency markets, and they are just, I can't say how volatile they are. They are just madly volatile right now, and it's probably going to continue anyway. So what we're going to talk about tonight are the usual, our weekly charts. How are we setting up to close out the week? Then we'll talk about the news. The news is coming out fast and furious. Like I said, this is really important stuff, what's going on right now. I'm talking about earth-shatteringly important. Also, we're going to go into a members strategy session immediately following this program, and that'll be at 7 p.m. Eastern Standard Time. Members, I'll be sending out another link to a private group session, so expect that. And let's go to the news first, and then we can go to the weekly charts. I want to let things settle down here in the currency markets. Let's go to the news. All right, first up, I want to walk through, let's start with the trade deal. The trade deal, again, another trade deal, the greatest trade deal ever. I'm getting tired of hearing it, to be honest with you. I love the guy as our president, but this has to stop. Shutdown averted. We'll go to that. All right. So here's a headline off of Zero Hedge. U.S. reaches trade deal in principle. Not parenthetically. Air quotes. In principle with China. Parenthetically again. So it is believed. I don't know if it's been validated yet or not. But if we do get a deal, I do believe it to be true. Hey, Norris. How you doing, brother? Yeah, you're right. Too much hype. If, in fact, they do get a deal, that will have meant that the president has caved on not only not imposing new tariffs, but he's also rolling back existing tariffs. If that occurs, I predict you will never, ever, ever see a final trade deal. Forget about a phase two. You will never see a trade deal, and I predict that we will have lost this war. It will be all over. If we blink now, it is all over. They will be the new dominant force, not only in the Pacific, but in global macroeconomics. It's just the way it's going to be. So I would be rather surprised if the president is naive to take this deal. But there are things looming in the background that he may believe may require him to take a deal to keep this economy afloat, because this is going to lead me into the next headline. And the Federal Reserve, in fact, let's bring up their balance sheet. I think it was updated either today or yesterday. Let's drill down here. Yesterday. It was updated. We are now at $4.095 trillion and rising. How do I know it's rising? They told us. Here we go. Headline, Zero Hedge. Massive, huge, largest ever Fed will flood market with gargantuan $500 billion in liquidity to avoid a year-end repo crisis. Here is the projected Federal Reserve's balance sheet by not 2021, not Q4 2020, not Q3 2020, not Q2 2020, but January 2020. The Fed's balance sheet will have eclipsed the prior high. And CNBC wants you to go buying stocks. I don't know what to say anymore. It's really to the point of absurdity. And there will be a ton of money to be made in this market. That I can guarantee you. The question is, will you be on the right side of it? We will not accept this as being the new normal because this is unsustainable. What they are doing right now is they're keeping this economy together with shoestrings and bubble gum. And it is not going to last. So, I don't know what the new year is going to bring here, but the fact that they are flooding this amount of liquidity into the banks tells me a couple of things. One, the banks don't trust each other. Why? Two, they're broke. They don't have the excess reserves. They need liquidity to get pumped in by the Federal Reserve to stay afloat. What was too big to fail back in 2007, 2008 is now way too big to fail. There are less of them that can fail, and you're seeing the Federal Reserve prop them all up, and this is just this is obscene. It's absolutely obscene. Let's add fuel to the fire here. I got to be honest with you. I had no idea these negotiations were taking place. They probably took place last night over martinis. The so-called enemies, the Republicans and Democrats, they got together. They hammered out a deal. Shutdown averted. Republicans and Democrats reach a one-spot, $37 trillion deal in principle again. And it's all debt. This goes a above and beyond what our budget is. Is this a stopgap? Yeah. This is in excess of what the budget should be. It's all debt. This is all brand new debt coming on. Absolutely incredible. Let's get to the charts. I'm going to begin with the weekly charts. I'll be honest with you. I was very, very close today looking at the close and saying, you know what, it may be time to lean into the short side of this market. But I said, no, don't do it. The path of least resistance is still to the upside, as crazy as it's getting right now. And the volatility that we saw today, the markets can shrug it off. And I don't want to pull the trigger until we are very, very confident that we are exhausted here. And I'm not 100% confident yet, but I'm getting there. I thought that I would be pushing this off for a few months, but as the news unfolds and this China trade deal is just absolutely horrible. And if you wonder why bonds dropped today, it's because all this means is that if you have a trade deal with China, all it means is that your deficit spending goes ripping through the roof. At least the tariffs stymied that a little bit. But if you take those tariffs off, it's just back to normal again. and we're just giving away our economy. We're giving away our jobs. We're giving away our industry, and we're not fighting back. Norris, you're 91% cash. Waiting for you to say when. Okay, brother. And I definitely, Norris is a member, and of course, he'll definitely get notified. So that's the reason why you saw bonds sell off today. I think traders thought it was also a risk-off day. I think stocks spoke otherwise. You may be saying, what are you talking about? Stocks ripped today. Did they really? Did they really rip up higher today? Let's take a look at the weekly charts. In fact, we'll take a look at a daily chart. We'll talk about one of the charts, and I want to go more into a deeper dive with members on the private group session later on this evening. And we want to talk about strategy. And honestly, I'm still processing everything that's going on right now. And as I speak to you right now, and I'm working through the charts, and I'm working through the after hours price action, and as I'm working through the news headlines, I'm trying to put that jigsaw puzzle together. Ultimately, it will come together, and we will have a strategy on how to trade this market. Now, if you're wondering how did we do so far this week, did great. Our gold mining stocks up. We sold covered calls against it. They appear as though they may expire worthless. If they don't expire worthless, we'll either A, roll out of the position and roll into a new covered call position, or we'll get called out. We'll sell puts against our NUGT position, or sell puts, cash money puts against NUGT, bringing in income. That is a bullish trade, not a bearish trade. And we'll try to get locked in at 32.50, thereabouts, 31.50, selling puts against those strike prices, and we'll get back in at a later date with a portion of our position. We only sold covered calls on a portion of our position, but I do want to maintain a certain level of NUGT, and we plan on adding more on a continuation breakout on NUGT. So more to come, members, on that trade. So TLT, thus far this week, not looking good. We were higher. We are trading lower. But remember last week, we met and I said, this is Thursday evening. Here's how the charts look on a weekly basis on a Thursday night, but there's still one trading day left to go. A lot can happen, and a lot did happen. So what you're seeing right now could change dramatically. So we're going to talk about these charts as if it's Friday, 4 p.m. The markets are closed. Obviously, we have one trading day left to go, but let's play pretend. TLT weekly chart not looking good. Reversal week. We are off the lows of the week. Volume light to the downside. So the jury's out on the TLT. Tips. Big concern here for me as a bull on gold, silver, the miners, the fact that the tips have turned negative on the week. We were positive. We had a bullish reversal bar, and we have turned negative as of today. So that is a concern. Lower highs on ultimate oscillator. The trend to the downside continues. So we take note of this. This is important. The dollar. Now here's what's strange. You had a lot of volatility in the gold markets today and silver. The dollar was down. It did spike, but it came off the highs, and you didn't get much of a bullish reaction on that pullback on the dollar. But net on the week, the dollar is down. I think ultimately we are going to break here. I'd be interested to see how it's trading after hours on the news out of Europe. And I didn't go over that article. The conservatives over in Great Britain are leading by a mile in the elections. That's huge. It's huge. And normally in years past, the dollar would have surged out of Brexit fear events. Gold should also be rallying, but I bet you the dollar is weakening. We'll see. I'll go to that chart in a moment. So the dollar weekly basis is weak. Volume, one trading day left to go, but it's trending lower than last week's volume. This is butt ugly here. Williams percentage R, horrible. Horrible. Lower high, double top. The VIX, this is a daily chart. Let's go weekly. Yeah, okay, so this is one of the reasons why I'm looking to the short side. And I spoke about this a bit last week. The VIX broke out last week. A lot of people don't pay attention to that or aren't talking about it. But we broke out here above this upper band of resistance. This week, we pulled back, rallied, we're higher. We have a spinning top formation. That's a sign of indecision. Also, we pulled back and did a successful retest of the breakout point. Now, again, one trading day left to go. For all I know, we break down to the single digits tomorrow. I don't know. I'm not that smart. The market will tell me which way it's going to go. But as it stands right now, pretending that this is Friday, 4 p.m., it is not looking good for stocks, despite the fact that they had a strong day today. And this is on a weekly basis, not on a daily basis. This is more high level that we're talking right now. Not day trading, none of that stuff. This is more macro, swing trading, position trading. This is what we're looking at. Long-term money, not the short-term blip, 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 quarters, nickels and dimes. The Dow transports, they had broken out several weeks ago. We are still holding the breakout point, still retesting. The longer it takes for this to test the support level, the less likely it is to hold. I'd be watching the transports. We really need to see a breakout fairly soon. I think it could still happen. We have a breakout on RSI. We're pulling back, beginning to hook up this week. No breakout yet. No breakout yet. Yeah. No breakout yet. Volume trending lower this week. Stokes flattening out. They may hook up. And the transports, this is going into my database right now. The VIX is bearish for stocks right now. However, the transports still looking okay because they're a leading indicator. They've been telling us in advance of where the markets may be going, despite the fact they haven't broken out to new all-time highs yet. They've been rallying off the lows faster than the major averages. Let's go to the Dow Jones weekly view. Weekly high. We're holding it. Indicators still look good. Watch the MACD histogram. Let's talk about this for a moment. The MACD momentum oscillator making lower highs. It's flat versus last week, but it's lower versus the final week of November. That could pick up again. You don't want to bet simply based upon one observation, but just take note. The path of least resistance remains to the upside. The Russell 2000 weekly view. The trend is up. New weekly high. No new all-time high yet. Very, very light volume. And we are currently, for disclosure purposes, we have a small opening position on the Russell 2000 using the TZA. It's a leveraged ETF. And I was very tempted to go adding more today. The S&P 500, weekly view. Let's drill down here. This is a little bit messy of a chart. Let's go to a 5-year view. That's better. All right, so a beautiful breakout of this megaphone formation. New weekly high, new weekly all-time high. RSI continues to rise. Stokes continue to rise. And this is the value of looking at the higher level view charts, the weekly charts, monthly charts. The banks ripped today. And in a moment, I'm going to talk to you about what you should consider to be the scariest chart out there. Think about it. What might be the scariest event for this market? Think in terms of the Federal Reserve. What's their biggest fear right now? And I'll go to that chart in a moment. Emerging markets. Ripped today. Why did they rip? The dollar was up. The reason is that these funds, a lot of these funds have China exposure. The EDC has 20% China exposure. So you saw a lot of money rotating into emerging markets. Is this sustainable? Maybe. We're certainly breaking out of a nice base here. And if they sign that deal, if there's a phase one deal and the Chinese won, why not? Why not buy China? Energy. Poised for liftoff here. Last week, bearish key reversal bar. We had retested multiple times this breakout point. We are breaking out. Stokes, higher lows, hooking up. RSI has broken out. It pulled back, did a retest, now follow through to the upside. Energy, we like. Oil. What did Chair Powell say yesterday? With including using the PCE, their favorite number for inflation, he said that inflation is 1.6%. 1.6. Do you think that your cost of living, including food and energy, is going up 1.6% a year? It's insulting, right? Oil is breaking out. Oil is going to go a lot higher, especially if the dollar breaks, as I predict that it will. Now, oil is going to hit everyone. Nobody's going to be spared. If you have, I discussed this morning on Swing Trading Today. The chart, I'll go to it in a moment, as a matter of fact. The chart of home heating oil. And the chart of home heating oil, which I use that for heating purposes, is getting ready for a major, major breakout. So, load up the tank if you have home heating oil. We'll be taking a look at that in a moment. Gold, weekly view, not a great chart. Horrible chart, to be in fact. You may be saying, Bob, it's up. It's been rejected. I mentioned that I'm looking for 14.80 the ounce, a close above that level. We hit 14.91 today, and we were rejected. Now, here is what I worry about with gold. And I want gold to go higher, right? But I don't speak my book. I don't work for CNBC. Here's what I worry about with gold. It's amazing what an annotation tool could do. I'm worried about a break of this bear flag formation. Now, my job is to be optimistic, yes, but it's also to be on the lookout for hazards or signals that the market could be sending us. And I would love to say that, you know what, my gold trade, I can't be wrong on this, but that's a horrible way of thinking, right? That's arrogance at its finest. So we don't think that way. We hope for the best, prepare for the worst. And that's exactly what I'm doing right now, this Thursday evening with one trading day left to go. If we close out the week where we close out the day today or lower, I would be very, very concerned about the gold trade because this is a bear flag setup, very, very bearish stuff. Not many people know about bear flag setup. Usually people talk about bull flag setups, and they're very valuable. But just as valuable and less talked about is the bear flag setup. If we break this lower band of support, it's all over for a while for gold. I'm not predicting it. I'm just saying, watch for it, okay? Up volume this week is not good. But one trading day left to go. A lot could happen. Now, to the chart that is the most scariest chart out there for the Federal Reserve. It should be scary for anybody out there that is long of the stock market, and it's not going to be the yield curve. The yield curve is steepening. You should be worried about that. The yield curve is steepening. It was pulling back. It's now steepening yet again. It's the 10-year yield. I spoke about this last week. Here. I said we were very close to a breakout on this bullish reversal bar. This week, we have broken out on the 10-year yield. This is significant. The Federal Reserve yesterday was able to send bond prices higher, therefore pushing this candlestick down below this lower band of support. We had broken out earlier in the week. The Fed spoke, yields pulled back, and we were down below this breakout point. Now, we are at the highs of the week. Now, every tick that this goes higher, the more the federal government has to pay on its debt. To control this is the market pushing back against the Federal Reserve. To control this, the Federal Reserve is going to need to start buying longer dated maturities. They are currently buying bills, treasury bills. Those are monthly bills, 2 month, 1 month, whatever the duration they come out in. Notes and bonds are denominated in 5-year, 2-year, 10-year, 30-year bonds, notes, and they're going to need to start buying longer dated maturities to control this price action, because this is things getting real, really fast if they don't control it. And this is, do I have it up here? I don't want to waste your time. I'll pull this up. Wait, I do. I do have it here. Here it is. Here is the American dream in a chart. What this is the bond market. This has financed countless wars, countless TV sets. It's financed countless jobs moved over to China. This has fueled the American dream for the past 30-odd years. And it is under a lot of pressure right now. This is the 30-year bond price. Cheap money. The Federal Reserve has printed it. And we are threatening a double top here. We broke down below this rising lower band of support back in the July quarter of 2018. Federal Reserve realized, oh boy, we have a problem. They stopped talking all hawkish and sure enough came in and rescued the bond market. This was the American dream going. If we have a breakdown below that low, it's Armageddon. Yields will be spiking through the ceiling. So the 30-year bond is under a tremendous amount of pressure right now. How much time do I have to go here? All right. I'm running low on time here. I'll try to wrap this up. Here's a monthly view. Very weak. Bearish reversal bar so far this month. Not looking good. We're breaking down an ultimate oscillator. This is the American dream. So be very careful. Watch these bonds. All right. And at some point in time, the Federal Reserve is going to have to kick it into gear. Let's go to the after hours action. Wow. Wow. This is the euro. Four-hour chart. Ripping through the ceiling. I don't even want to look at the US dollar right now. It's great for my gold position or gold mining position. Let's take a look at cable. Cable is the British pound versus US dollar. Ripping. Let's take a look at the US dollar. Wow. my God. Oh my God. We are down spot 69%. This is a massive move in currencies. This is massive. I don't want to be overly dramatic here, but this is almost historic, what we're seeing right now. So can I ask you to hit that like button, please, if you would? Wow. This is amazing. We're going to bounce here, but I don't think it lasts. I think we're going a lot lower. Let's go over to gold. Nothing. Amazing. It's down. Let's check out the stock market futures. The Russell's ripping. NASDAQ ripping. Bonds getting annihilated. This is what we were just talking about. Bonds getting annihilated. This is why gold is not rallying right now. Yields are surging. So going back to the ten-year yield, we are dramatically higher at current than where we closed out the day. And I've always warned that this country needs to get very, very worried when bonds drop along with the US dollar. It means that there's a crisis of confidence, and that's a problem. And with that, I don't think that this rally in stocks is going to last. I think that we're going to fade, if not by tomorrow morning, by late morning, early afternoon. Be very, very careful here, folks. This is a historic evening. RSI, we're trading above the third standard deviation Bollinger Band on a 4-hour basis with RSI at 72.43. That's on the S&P E-mini futures, folks. This is not a .com stock. This is the S&P 500 ripping. Very, very overbought. I would anticipate a fade here into tomorrow. That doesn't mean it's going to crash, but with yield surging, it's certainly not a bullish thing for the stock market. Amazing. Okay. All right. A lot going on here. Let's check out oil. And then I'm going to shut it down. Let's check out Bitcoin. Nothing. It's actually down. Now, Bitcoin is a crypto that I'm looking to put on again. We were long of it earlier in the year. We did it twice. Made a lot of money on it. We bought it down the 3,000 handle. We saw I think it was a monthly breakout we bought it on. And we sold it, I don't know, about 8,000, around there. Now we're looking to get back involved. All right, so weekly chart Bitcoin. We're in a tightening wedge formation here. I made this note the other day, this yellow line for RSI, and it's showing that we're putting in a potential double bottom because we broke out back here. We're pulling back, possible double bottom setup on Bitcoin. I would have expected, with the dollar tanking and with bonds tanking, seeing some positive reaction here. Nada. Very surprising. All right, let's just leave off with oil. Hey, John. Yeah, your point's well taken. Yeah, we were talking about that a short while ago. I'm trying to get my head around the reason why the euro in particular is rallying, and I would really like some feedback because it means Brexit, and it could ultimately end up meaning the end of the EU. So I'm just curious as to why the euro would be rallying. Is it just that we just became, given the Federal Reserve's actions, especially today, that we were the least dirty shirt in the bin. Now we are the dirtiest shirt in the bin of the developed economies. I'm not sure yet. We'll learn more, and I'll consult brighter minds than mine. But very, very interesting night here. Really outstanding night in terms of history, news, price action. I love this business. Here is the headline. John was referring to it. Thanks again, John. Cable explodes higher as first polls show conservative blowout, biggest majority since Thatcher. Okay. I guess that is all the news that's fit to print, folks. Members, we're going to go into a strategy session. I'm going to send out a link in a few minutes. If you're not currently a member, that's fine. If you want to get alerted of when I go live in the future, please. Hey, Santiago, how you doing, brother? Bob, do you think Starbucks is breaking out of a triangle formation and heading up? All right, I'll check it out for you. If you're not currently a member, that's fine. If you want to know when I go live in the future, I send out a 15-minute alert. There's a link down in the video description area. Just enter your email address. If you watch this on the website, anywhere on the website, you'll get it. I send that out to everybody. And I don't spam. I don't do that stuff. Santiago, Starbucks. We'll leave off with that. Now, Starbucks is a consumer discretionary name. We are long of the consumer discretionary names. They did very well today. Let's go with a monthly view first. All right, so obviously we pulled back here, and there's a saying I always like to use, is that the test is always at the top. Meaning, we're moving up higher, but do we have the rocket fuel to press through the 98.27 level to move on to new higher highs? We don't know. The market will tell us that. We're not that smart, right? So here is your range. $98.27 to $80.80. Play that number. Let's throw up some overlays here. We're on a monthly chart. Let's throw up the monthly overlays first. No resistance to speak of until we get up to the 98.27 level. After that, we have a rising upper band of resistance. And that's going to be well above. We're going to be over $100 a share. Easily. Weekly chart. At current, we have managed to recapture a support level. 1 trading day left to go. This recapture is not in the books. So by 4 p.m. Eastern Standard Time tomorrow, if we are still trading above this at current, in my book, it's still a resistance level. It is not support yet. If we're trading above it, that's a great thing. Keep in mind, you have the 20-period moving average, which is declining. That is acting as a bit of overhead resistance. And you could see, zoom in here. You could see that the high of the week coincided exactly to the range of where the 20-period moving average is trading at current. And I'll point out another bit of resistance here that you may want to keep in mind. That is the 87.65 level. We closed out the day $88.22. So we're above it. But you want to see it close above that mark. That would make me feel better about the trade if you were looking to add to your position or open a position. Now, let's make the assumption that we close out the week above the support level. You should expect that this new upper band of resistance, it was support for a long time, is now going to act as resistance. So watch that as your new price range, your new upper band of resistance. Daily chart. All right, so we broke out above support today, 87.65. Short-term swing trade looks good. Let's throw up the weekly overlays here on a daily chart. Here is that weekly resistance at current on a daily basis anyway. It's support. Let's see if it closes there. That's what's critical. If we fail, if we roll over and fail to close above, let's call it 87.34, then there's a problem. That would mean a breakout point failure or a bull trap. So what I'll do is I will process this for you. If you want to keep that, in dashed line are the weekly support and resistance levels. Solid line, the daily support and resistance levels. And the black line is my manually drawn one. RSI looking good, Stokes looking good. So it's looking okay. I just want to watch for that weekly close. That makes me feel better about the trade. And hopefully I answered a bunch of questions. And with that, members, we're going to segue over and into, in a couple of minutes, 7 p.m. Eastern Standard Time, a private group session. I'll see you there. Everybody, thanks for joining. Everybody have a great night and a profitable trading day. Be well.